Hey everyone, I just want to start this weekly news recap wrapping up what happened this week. On Monday, Fiat Chrysler proposed a 50-50 merger with Renault, but Fiat Chrysler's shareholders would receive a special dividend of 2.5 billion euros or about 2.7 billion USD to compensate for the difference in market value. This merger would create the third largest automaker and would save the new entity about 5 billion euros a year without having to close any plants. Renault has a long-term alliance with Nissan through the Renault-Nissan-Mitsubishi Alliance. Whether this alliance continues after the merger is still unknown. But if the alliance isn't broken, that alliance would form the second largest automotive group. Board members of Renault will be discussing the merger and hopefully come to a decision next week. Also on Monday, it was reported that the US and Japan were getting close in a trade deal to address the trade deficit between the two countries, and they would expect a deal probably in August. On Tuesday, Alibaba is considering a second listing in Hong Kong and raising as much as $20 billion to fund new initiatives such as cloud computing and the Hema supermarket. On Wednesday, Devon Energy decided to exit Canada to focus on its US oil business with the sale of its Canadian assets to Canadian Natural Resources for 3.8 billion Canadian dollars. Canadian Natural Resources stated that the deal was too good to pass up, and on top of that, the assets were adjacent to its own operations and they could save around 135 million in costs over the year. Also on Wednesday, we had China come out stating that they are prepared to restrict the export of rare earth minerals. These rare earth minerals are a group of 17 elements that are used in a large number of electronics. The mineral itself is not rare, but it is costly in refining them. China produces about 78% of the rare earth minerals and owns about 40% of the global resource. On Thursday this week, Tesla had its price target cut again by Barclays from 192 to 150 as the demand is stagnating in the US, and they seem less convinced that they can meet the delivery targets this year. Tesla also came up with their China-made Model 3 prices at 328,000 yuan, which is about 47,500 USD, which is around 30% cheaper than those being imported. The merger between T-Mobile and Sprint hasn't been easy to gain government approval as they wanted to keep four national competitors. In order to clear the merger, the Justice Department has asked T-Mobile and Sprint to lay the groundwork for a fourth national wireless carrier. Therefore, Sprint is looking to offload Boost Mobile for around 3 billion USD. And on Friday, guess who came up interested? Amazon. Verizon and AT&T both dropped on the news with the possibility of Amazon entering the space. Also on Friday, what hit the markets unexpectedly were the tariffs on Mexico. It will start at 5% on all goods starting on June 10th and increase 5% every month until it reaches 25%. The reason for the tariffs is because of the increase in illegal immigration from Mexico, and the US would like them to increase their efforts in preventing this from happening. The auto sector is trading lower because many auto factories depend on parts from Mexico, and with the increase in tariffs, the cost will most likely be passed on to the consumer, which will increase car prices and will hit auto sales. Crude oil can't seem to find a break. If you recall last week, crude oil dropped as the trade tension between the US and China lowers the global demand outlook, and with the buildup in crude inventories to the highest level since July of 2017. This week, crude oil started off with a good start, trying to recover some of its losses from last week, as Russia is considering extending its oil output reduction with OPEC. But on Thursday, when crude oil inventories came out, it missed consensus, and what really hit the oil market hard was the gasoline miss. It was reported a gain of 2.2 million barrels versus an expected loss of 500,000 barrels. And on top of that, with the new unexpected tariffs from Mexico, it didn't look good for crude oil. There has been just so much news weighing down the price of crude oil in the past few weeks. Overall, this week, the market traded lower with barely any good news and just more uncertainty and bad news. The US trade tension continues to get worse and will most likely last longer than many expected, as it seems to be no progress being made and only more retaliation from each other. On top of that, crude oil got hit hard midweek, and therefore the energy sector drags the market down even lower. And to finish the week off, we have the Mexico tariffs, which is not only causing the market to go down, but crude oil as well, as the US does import around 680,000 barrels per day from Mexico. When it comes to earnings, some big mover this week is from the apparel retailers, with Canada Goose down almost 30% for the week. They beat their earning estimates, but they anticipated a revenue growth of 20% and EPS growth of 25%, which are both below the analyst estimates. Abercrombie & Fitch also closed the week down almost 30% as they beat both their earning estimates as well, but the comparable sale only rose 1% versus the expected 1.4%. They are also expecting sales growth of around 0 to 2% and flat comparable sales. Capri Holdings, which was formerly Michael Kors, but after they purchased Jimmy Choo and Versace, they renamed the company Capri Holdings, but they also beat their earning estimates, but their guidance didn't quite meet expectations, and the stock closed the week down over 16%. We also had Gap report their earnings this week. They missed their earning estimates and the comparable sales fell 4% versus the expected drop of 1.5%. They were also expecting comparable sales to be down single digits for the full year versus the consensus of a plus 0.2%. They closed the week down almost 13%. And lastly, we have Dell Technologies, which closed the week down almost 10%, as they did beat their earnings per share but missed on their revenue. And as always, if you like this series, please like and subscribe, and thank you for watching. I'll see you in the next video.